Rudy Adolph, what's happening in the brokerage industry? We had the flash crash, the Facebook IPO flop. How is this affecting the brokerage world?
Well, clearly you're looking at an industry that has major challenges. An industry that barely has a 4, 5, 6% ROE. It is simply an unsustainable business model. And there's a real risk that ultimately the brokerage industry is going to go the way of Michigan's car industry, and it's going to be very difficult for a long time.
So are you seeing more brokers from Merrill Lynch, which is owned by Bank of America, and as well as Smith Barney, which is co-owned by Morgan Stanley and Citigroup, go solo, become independent reps?
Oh, absolutely. There is a very strong trend. Every year, hundreds of billions of dollars are moving one way, from the wirehouses into the world of the independents. This year already $60 billion has left the traditional wirehouses, or has changed within them. You're ultimately putting tremendous pressure on these business models.
So how do you see it ending up? What does this mean over the long term for those big brokerage houses? They got a lot of overhead.
Oh, they have gigantic overheads. And in reality, it's their clients who are leaving them first and foremost. And when you have a business model where ultimately your clients, one after the other, are voting with their feet to move towards independent wealth managers, you better get your business model right very fast, or you're going to be under enormous pressure.
So how can the individual brokers or RIAs grow their business in this environment?
Well, it's interesting. Every robust independent broker has the opportunity to leave Wall Street today. Typically, when teams join us, they retain 95% or more of the client assets. And when they call their clients and they're saying, I'm about to leave broker or bank X, usually the response for the client is, what took you so long? So in other words, for many of the really strong teams, they have an alternative, and the alternative is going independent.
For a long time, the big shift was towards high net worth individuals. They were basically putting small commissions and low asset players in buckets, or handing them off to the online brokerages and just pushing for those wealthy individuals. Is that still the trend?
Well, clearly within the wirehouses, it is an ongoing trend. And it's just because of their cost structure. They have such a gigantic cost structure, overheads, you mentioned it before, that in reality they cannot profitably serve clients unless they have a very significant net worth or a very significant level of assets with the firms. But as we see, and they are voting with their feet, they are even struggling with wealthy individuals these days.
This market is
stock tickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to